This is how you can profit with any strategy in the market. Doesn't matter what market it is. It really doesn't matter what strategy at all. This is how you can profit. Because a lot of people, traders, they get caught up with the different types of trading there are in the market. Whether it's ICT, break and retest, indicators, news, COT reports, it doesn't matter how you trade. It doesn't matter what market you trade. You can truly profit in any market when you just understand this. And if this video helps at all, drop a like, subscribe, because there's a lot more videos like this to come. And if you want further information and just further help on this, definitely join a Discord below, completely free, and I host free Zoom calls and really answer any questions. But let's dive into this. So how can you profit with any strategy? And no, this is not clickbait. I've been a day trader in the market for well over a decade, and I've seen a lot of traders become profitable once they understood this very simple idea. So first, let's go over to you as the trader, right? You don't have a nose or a mouth. I always forget to draw that. Boom. There you go. Right. So this is you as a trader, right? And the first thing that a lot of traders do is that they prioritize strategy over understanding the underlying fundamentals of what trading is, right? So let's first go over to the different types of strategies for this. So for the different types of strategies, we have a lot. The common ones that you're seeing in the market right now: ICT, break and retest, indicator trading, news trading, COT reports, which is commitment of traders. If you don't know what that is, definitely comment below. I can make a video on this to further go into it. This is something that I use during my manual trading days. But a lot of people think that this is the most important part, which is the strategy part. But in reality, you can profit with any strategy in the market, because the most important thing that you as a trader need to understand, let me draw it to the side, is the simple idea, and I know you guys have heard it time and time again, but it's the simple idea of risk management. All right, that is terrible handwriting, but it's going to do for now, right? But it's the simple idea of risk management. And the reason why risk management is so important is because you can have a strategy that may not have the best win rate to it, but if your risk management is great, you are going to make money with the strategy. And in the last video, I did talk about the one thing that makes traders unprofitable. So if you follow what I said in that last video, and if you don't know what I'm talking about, definitely watch the last video first. But if you follow what I'm talking about in that video and pair it with this concept of risk management, you as a trader, you are going to make money, whether it's the Forex market, the stock market, the bond market, the crypto market. It really doesn't matter the market, and it doesn't matter the strategy, as long as your risk management is key. But there is one issue when it comes to this. Because a lot of traders ask, hey, Artie, what is the best percentage I should risk per trade? And that's a question that I get pretty often, not just on the channel, not just privately DMing me, but it's a question that a lot of traders have. It's a question that I had when I first started trading over a decade ago. And to understand how much risk you should be managing per trade, you have to understand your strategy and your results. So what do I mean by that? So let's say, for example, you pick a ICT strategy and a break and reset strategy, right? So for this, I'm gonna reposition real quick. All right. So for this, let's pretend that there's two traders trading two different types of markets, right? So let's have trader A over here. I love my stick figures. And let's draw trader B over here. Trader A is doing a ICT strategy, and trader B may be doing a break and retest, right? So these are two totally different ways to trade the market that trader A has and that trader B has, right? Two totally different ways, but they both make money. So trader A, let's say his win rate, I'm gonna abbreviate it as WR. Let's say his win rate is 10%. Right? So out of every 10 trades, he's going to win approximately one trade and lose about 9. Now let's go to trader B. For trader B, let's say his win rate is actually at 50%. Right? So for every single 10 trades, he's going to win about 5 trades. Now there's nothing bad or wrong about these win rates whatsoever, as long as you compare it to what their actual risk to reward is. So risk to reward, let's just say RR. For trader A, let's go back and let's say his risk to reward is a 1 to 15. That means on average, for every trade that he wins is going to make up for 15 losing trades. And let's just say traders 2 risk to reward is a 1 to 2. Perfect. So what do these numbers tell us, right? It doesn't mean that trader A's strategy is worse than trader B's, but it tells us that trader A, right, is most likely going to incur a lot more losses before he gets his 1 to 15 win. So in theory, that means that he can blow through 9 losses in a row, right, and then hit a 1 to 15 and become in profit. Whereas trader B, for example, just statistically, out of every 2 trades, he's going to win 1 trade. And that 1 trade is going to give him a 1 to 2 risk to reward ratio. So when you're looking at how to profit with any strategy, and specifically how risk management allows you to be able to do that, for trader A, you should not be risking a large amount of your account for this strategy. Because while yes, statistically out of every 10 trades, you should win 1. In reality, how this actually looks in trading is that you can go through 20 trades and not have a winner. But and then the next 2 trades you do may win back to back. However, let's just say your account size is, I don't know, say 1,000, right? And if you're risking $100 per trade, you will never get to see this win that you're going to encounter in the market. Whereas if you're trader B and your account size is $1,000 and you're risking $100 per trade, then statistically, yes, you will be able to see profit just because your win rate is a 50%, right? So to understand how much to risk, right? To understand how to take your strategy from one that may not win or you're not consistent with to really being able to profit with any strategy in any market, pick a risk to reward, pick a win rate for your strategy, right? And that comes over time by optimizing it, and pick an amount of risk that is appropriate for it. So for a strategy where you're only winning 10%, you may only want to risk anywhere from 0.1 to about in my opinion, 0.3% of your account, right? If your win rate is going to be a 10%. Because remember, in the real market, you're not going to win 1 trade for every 10. You could go through a losing streak of 20 trades or 30 trades, but then win your next 3 trades or 2 trades in a row. But if you blow your account before you're able to get to those 2 or 3 winning trades after a 20, 30 trade losing streak, then your account's blown. You don't have any more money to trade with. That's why for a trade with such a low win rate, like this 10%, you want to trade with more conservative risk. Now, if you go over to the person that has the break and retest strategy over here, now his risk could be a little bit different. He can trade anywhere from about 0.5 to about 1% per trade, right? And even in my opinion, this 1% is a little bit too much. But if you want to be on the more aggressive side, you can trade 1% per trade. Why? Because his win rate is 50%. So on average, he's not going to have as big a losing streaks as the person over here is having. Because trader A, it is inevitable for his strategy to have prolonged losing streaks. It's inevitable because his win rate is 10%. So if he has back-to-back losers, that's normal. That's a part of his process. So he has to risk his capital accordingly to that. While for trader B, it's going to be more unusual for him to have prolonged losing streaks. Why? Because he has a much higher win rate. So for trader B, it's appropriate for him to risk anywhere from about 0.3, 0.5% to about 1% on the very high end, simply because his win rate is higher and he's not prone to have losing streaks as part of his strategy like trader A is. And for traders that I've seen, and even in my own trading and from just evaluating so many traders and helping them become profitable, traders that understand this concept, not just that risk management is the thing that makes you money in the market and that can help you profit with any strategy, but the idea that all of these strategies here, whether it's ICT, whether it's a break and retest, whether it's indicators, news, COT reports, it really doesn't matter. The idea that all of these trades, all of these strategies are different from each other. So you cannot assess a baseline risk to any of these strategies, because each strategy has its own complexities. Each strategy has its own win rate and has its own risk to reward. And every single trader themselves, they have their own win rate and risk to reward as well. So that's why you have to do two things. And the two things you have to do to understand how much risk to manage on every single trade that you take in order to be profitable and make money in the market. The two things that you have to do is A, we can write this legibly. First is back test. Because if you do not back test your results without seeing what's going to happen in the market, you have no idea what your win rate is or your risk reward. After you back test, you need to live test it. And not just live testing it on a regular account, but you need to live test your strategy with real money, but with low risk. And I find that when traders open up a $100 account and risk $1 per trade, psychology is not going to be a factor in their trading because they're not trading with any money that they're not willing to lose. All right. And furthermore, on top of that, it's going to allow you to be able to know what your risk to reward is, what your win rate is, so you can understand, okay, when I start trading my actual account, right, to start creating actual profits in the market, quit my job, whatever you want to do, you know that, okay, my win rate is low at a 10%. But I know that a win is going to be a 1 to 15. So I cannot risk 1% per trade, because if I have a losing streak of 30 trades in a row, my account is going to be down over 30% because of spread and commission. So it's more appropriate for me to risk this lower, more respectable 0.1 to 0.3% per trade for trader A. And for trader B, after he does the back test and live test process and he understands his numbers, he has a win rate of 50% and a risk to reward of a 1 to 2. Now he understands, okay, it can be appropriate for me to risk a 0.5 to 1% per trade because I understand what my risk to reward is in my trading. Now, of course, it's not financial advice. Go through and test it for yourself. If you have a 50%, you decide exactly what you're comfortable with risking for your trades. But just through the markets for well over a decade, this risk management is one of those key topics that truly make traders profitable and win in any market. And if you're interested in this or asking me any questions, I like to host live Zoom sessions with my free Discord to ask any questions. Definitely feel free to join it. Drop a like and subscribe if you found any value from this whatsoever, and I will see everyone here in the next one.